Hey, what's going on everyone? Back with another Elliott Wave analysis for Bitcoin. In this video, we're going to be discussing the shorter time frame or medium time frame analysis rather, and see what our next expectation is going to be utilizing the Elliott Wave Theory. Now, since our last few analyses, we've been discussing the real possibility of a larger corrective pullback after this diagonal idea has played out, and that was our primary idea. And to quickly recap, we've been discussing that this was really the only real mode of pattern going forward for a larger accumulation buildup for a larger degree wave 1 before we move on to the expansion phase for a wave 3 to the upside. But that calls for a pullback, ladies and gentlemen. Before anything else, we got to remain neutral, and we're going to expect pullbacks no matter what. So in this video, we're going to be discussing the clues that we are going to be looking for at the current time of recording in terms of how this pullback is going to be happening and how severe this pullback is going to be, because it can overlap with another idea of the impulse idea that I also discussed as the alternative idea. Remember, a leading diagonal is a specific type of corrective wave pattern that occurs in the first wave 1 or wave A, and in this case a wave 1 that we're trying to identify, and it's part of a broader accumulation phase that leads into a larger price movement and signals the early stages of a new trend. The structure tends to show a struggle between the buyers and sellers, with price momentum slowing down before it picks up again in the main direction of the trend. With that being said, everything is going to be constructed of mostly simple zigzag ABCs, but can really be any zigzag family, including complex WXYs that include multiple zigzags. It's very common to see a sharp pullback after the diagonal is complete for a wave 2 if the diagonal was part of a wave 1, because it was a loss of momentum that you had to observe as the apex got tighter. If you are able to identify the overlapping waves and is contained in the wedged shape pattern, this shows that the price is weakening as the market pushes in the direction of the trend, in this case to the upside. The loss of momentum often leads to a quick corrective pullback move. Once the pattern completes, it will then usually correct a significant portion of the preceding wave, and in this case the diagonal. Wave 2 corrections are often sharp and deep because traders will take profits or reassess after the slower and weaker move of the diagonal, and that is why we see that characteristic of a tight wedge shape. Furthermore, the market sentiment rebalance characteristic within the diagonal is what helps us eventually find more clues on the next corrective phase for this wave 2 pullback, meaning that due to the internal struggle between the buyers and sellers, there was really no side gaining full control. There was no real bullish or bearish sentiment. As long as you're able to identify a larger diagonal, you know that this is going to be part of a larger move to either to the upside if you're seeing this as a wave 1. So that is what we're going to be looking for, and what kind of corrective clues that we're going to be looking for this wave 2 pullback. And if this is going to be a larger pullback, this is what we're going to be expecting around the 59 to the 60K regions before we actually start to identify a larger expansion phase for that wave 3. So that leads me on to what I think is going to be the next alternative idea, where if we don't come back down to these levels, if we come back down to these levels over here, if we have a lot more weaker kind of a pullback, then we can identify a possible impulse idea, and this is going to be a lot more bullish, meaning that we may be working in the idea of an extension for a primary wave 3 in the yellowed circle. So that means is instead of seeing this as a larger accumulative pattern, we may be working already in the expansion phase already, and what that means is that this primary wave 1 and 2 is already complete. And we're now working in a similar fashion of a smaller degree, 1, 2, 1, 2, and so forth. It's pretty much infinite. And as you can see here, the internal structures do just kind of a small shift in terms of how we're seeing it. We want to be working with 5s as much as we can, and in this case, if we have a 5-way move up for this wave 1, then that is going to be the beginning internal intermediate degree wave 1 in the orange as the beginning stage of a 5-way move to the upside for that primary wave 3. Alternatively, instead of seeing this as a diagonal where we look for a wave 1, 2, then we're going to be looking for that expansion phase a little bit later. So if that's the case, we're going to be looking for, depending on the severity of the pullback, like I've said, these critical levels are pretty much going to be kind of the determinant factor in terms of how this is going to be playing out for this idea, meaning that if we get a smaller pullback, that means that this wave 1, 2 of the minor degree in the white is going to be our next idea. Now, whether we see this as a flat, I'm not entirely sure. It's just too much noise happening on the shorter time frames, but we're still looking for a small minor degree wave 1, 2 pullback, like I said, and depending on the Fibonacci level that's achieved from this level to this top here, then the 61.8%, if that gets saved as well, most likely at the 50% or the 38.2%, even better, then the expansion idea of happening early is going to be a lot stronger and going to be a bigger phase for this expansion phase, how this is going to be playing out, and a lot more bullish than we anticipated. So we're going to be monitoring this very closely depending on the severity of the pullback. So that also leads me onto the idea which one is playing out really? And really, you can't know. You really won't know until it actually happens. But if you understand the context of how these waves play out, you can really try to understand how it works using the preceding and receding waves, meaning that I just have a clear example here based on ABCs and 1, 2, 3s because this is the best overlapping structure or the hybrid price action that you look for. But usually people tend to have a difficult stance in terms of whether this is going to be a larger pullback or a smaller time frame pullback where the correction of or the severity of the pullback doesn't happen as strong. And when you have a pretty good wave 3, depending on if this wave 3 extends even further, then you know that's going to be a wave 3 for sure. But if let's say you're in a wave C and you're in a wave 3 where the same similar targets for a wave 3 and a wave C happens. For example, if we take this extension of a trend-based Fibonacci extension, you can see that we did more or less hit that 161.8%, which is a wave 3 common target and also a wave C extended target as well. The C target can also go up to the 261.8%, but that's usually more common characteristic of a wave 3. However, since we are in a very good hybrid zone of this being an ABC to the upside, we didn't necessarily hit the 161.8, so that shows me a loss of momentum, especially that we're seeing overlapping structures of this last possible move of this wave C. I'm seeing an ending diagonal here, so that is showing us an ending diagonal within a larger diagonal as well for this final preceding wave as well. So that's why I'm also expecting more or less a more weighted idea towards this larger corrective pullback depending on how severe this pullback actually happens. But the idea remains the same. The initial move after what happens after a wave C or wave 3 or a wave 1, 2, 1, 2 is that you're going to be looking for, or you're trying to focus on the initial move. If you know that this is going to be a stronger impulse move to the downside and it shows that characteristic, it's most likely that you're going to be in a larger corrective move to the downside, either a larger nested 1, 2, 3, 4, 5 to the downside, or if this is going to be a very weak structure, then you know it's possibly going to be part of a continuation pattern of a 3, 4 or smaller degree wave 1, 2. So in this case, if we're looking for a smaller corrective pullback, a 1, 2, 1, 2 idea is going to be fitted a little bit better. But until we get a little bit more data, possibly within this week, then we know that this idea could be kind of overlapping with each other until then. And in my opinion, we won't know until we actually get the severity of the pullback of this first actionary wave that we're going to be looking for. And the first actionary wave is going to be either a wave 1 or a wave A. So if that's going to be a wave A and this is going to be a very short-term pullback, then we know that this is going to be a wave 4 and then a wave 5 is going to be expected to the upside, or a 1, 2, 3 in terms of a 1, 2, 1, 2 pullback. So that's how we're going to be identifying it in terms of the context after you know that you have a completed move or you have assumed a completed move. And in this case, the 161.8% not hitting quite nicely, and we have a diagonal within a diagonal basically, then you know this is going to be a larger pullback in my opinion. So with that being said, in my opinion, I think that this is how we're going to be seeing it for this larger pullback. I think that we're still going to be working for both the upside for both scenarios no matter what. I'm still expecting all-time highs being breached and also going up into the 80K to the 90K regions before anything else, before a large pullback of a bear market to happen. But what if none of this happens and we're still moving correctively to the upside? I briefly discussed this in my previous video as well, where we could be working in an ending diagonal where we still similarly in characteristic of corrective moves that we break the all-time high, and we could still be working in an ending diagonal, and we could be working in a possible WXY to the upside, where if we do have a shorter time frame pullback, this diagonal could also be similarly working in another corrective fashion to the upside, and that could still be working in a wave 3. And in my opinion, I think this wave 3 breaching the all-time high and we work correctively to the upside, then you know that this is going to be part of an ending diagonal, but similarly that's leading us to pretty much us not as ambitious of a target, but still up into the 80K regions. So hopefully that was helpful. If you guys have any more questions, please leave them in the comment section below. If you're not already following me on social media on X, follow me there as well. I do a lot of my daily updates there as well at XForceGlobal. If you're not in my Discord membership, you please do not hesitate to contact me and inquire about the membership. It's all in the description below, the links. I also do Patreon updates as well every Wednesday and Friday if you want to get more updates on there and get an all-around update. The link is in the description below as well. Hopefully that was helpful. Thank you very much. Have a fantastic rest of the week. Good luck. And that is how we're going to be kind of concluding everything in terms of this, the expectations. I think that we're at peak validation for this diagonal. Either that, we get a shorter time frame pullback of a 1, 2, 1, 2 idea, or we continue up correctively and this ABC idea is still working in for a larger wave 3 to the upside for the diagonal as an ending diagonal. Thank you very much. I'll see you guys in the next video. Bye-bye.